Hello, good morning. My name is Orlagh from Detail Property Inspection, but I'm not the inspector, but I'm inspection company Detail. It's been this industry almost close to the 20 years, and we provide residential commercial inspections. I love this business because every day I want to listen to people say, oh, Orlagh, I love your company. I love your professional, your inspectors, very professional, homemakers do. And we do not have any problem, and I have another deal coming. So I very love this inspection company.
Wonderful. So we'll start out with escrow, since it's always about escrow. Our escrow is opened, our escrow is closed, our escrow is funded. So we'll start with escrow. Tell me what you look for in your package. What do you need when somebody opens escrow with you? What are you looking for?
Well, first of all, I'm looking for a fully executed purchase agreement. Fully executed, with all the counters signed, everything, because that purchase agreement is your joint escrow instructions as well. So everything needs to be complete. That's the first thing. Then I look for the earnest money deposit to open escrow. And we generally don't send out papers until we get that deposit. And nowadays that comes generally as a wire transfer. So we will send our instructions for wiring to the client so that they can wire the deposit. And then we prepare our supplemental instructions as to what we do as escrow holder. As an escrow holder, we are a third neutral party to the transaction. So that we're there to take the instructions. So we go over the contract very carefully and make sure, our job is to make sure that all the conditions are met.
Wonderful. So let's talk a little bit about probably the most misunderstood document in your package, statement of information. Tell me about that, how important it is that you get it in a timely manner.
Okay. Well, I'll tell you for escrow point, but then title probably can tell you.
Cross that too,
Yeah. Okay, so the statement of information is a form that goes out to the escrow package, wherein the clients fill out all the personal information, social security, addresses, and so forth. You get that to title as soon as possible, because that way they can eliminate any possible judgments or liens, tax liens, spousal support, anything like that that comes up in that name, particularly if it's a common name in Los Angeles County and we're dealing with Los Angeles County. They can eliminate that, because oftentimes they will report out something on their preliminary report, some kind of a lien, and it has to be eliminated by reason of having a statement of information. So that's very important to get back. The complete opening package is very important to get back to escrow as soon as possible.
So Annie, what's your timeline look like? We open escrow, how quickly do we do order, and then talk a little bit again from your aspect about statement of information.
Sure. So first of all, I wanted to say that when you have a listing, we strongly recommend you to open a listing prelim. Why? Because let's say if there's a lien or judgment on the property, it takes time to solve it. So typically, escrow is going to draw demand, contact the lien holder, judgment holder. So let's say if you have a cash transaction, you're probably going to close in, sometimes close in 10 days, 15 business days. What if there's going to be a cloud on title, a judgment or liens? It takes time to clean it up. So typically we will suggest the listing agent, when you have the listing, open it up so that title company or whoever you're working with, they can decipher the information, letting you know if there's going to be a red flags on the title. Or you can wait till when there's a fully executed purchasing contract, and escrow is going to let us know, okay, Annie, please open this title report for 123 B Street in, let's say, Arcadia, then we can do that. So the lead time for the preliminary title report, typically it's between 3 to 5 business days. We can rush it if there's an emergency happening, but typically that's a lead time for that. then I wanted to piggyback on what Terry was talking about for the statement information. So what title companies we do is on your preliminary title report, there's going to be a section that's going to ask all parties to fill out the statement information. It doesn't matter what title companies, we all require that. So what we do is once we get that form, and basically it's asking the seller and the buyers where they live for the past 10 years, their last 4 digits of social security numbers. So we're going to run it. For example, if I'm the seller, Annie Fan, it's a common name. So when title company, we run Annie Fan under the name, we see maybe 5 judgment, 10 liens on this, under this name. How are we gonna know it's actually Annie Fan, me, had those liens or judgments? So what we do is we're gonna require by the statement information, we're gonna run that. So when we run it, it's called a GI General Index. Okay, so when we run it, the name will have the property address, also the last 4 digits of social. So that's how we cross-reference and then clean that up. So we also require the buyers gonna do that. What happened is FBI, they will provide us the terrorist list every month. So we will cross-reference. And we did check with our title managers. He's been in business for over 30 years. We haven't really come up with a terrorist buying a property. Maybe they're too busy to do other things. That's kind of what's going on. So thank you.
Thank you. Yeah, I experienced that personally. We were doing a refi, and my ex-wife's name popped up, and I hadn't done my SI, so when her name popped up, she had a warrant out for falsifying checks. There were a number of issues that popped up that really were problematic, and supposedly she lived in San Bernardino. We lived in Corona. And so we were able to figure it out. My lender called, lovely lender, and said, hey, give me the SI so that we can take care of this. He got it to title, and we were cleaned up, but it could have been a problem. So let's go to the lender. We have confusion, I think, sometimes as an industry between pre-qualification and pre-approval, and so talk a little bit about that and what you need in terms of pre-qualifying or pre-approving.
Sure, absolutely. Thank you. Do I have to use the mic or? Okay. So we've got 2 different types of qualifications. We have a pre-qualification and then the pre-approval. The difference between the 2 is on the pre-qualification, it's basically you've got your client calling us, and they're going to give us a little bit of their information. They're going to tell us they've got a job, how much they make, maybe provide a teeny bit of documentation. And then in there, we're going to say, okay, looks like you're pre-qualified to buy about $600,000 worth of a home. I would not put that person in my car if I were in your shoes until they're fully pre-approved. There's a big misconception between pre-qualification and pre-approval. Pre-approval is full documentation. So, and I was going to say, I want to disagree with Frank from the very first question, because he said the first thing you do is go to escrow. No. The very first thing you do before you get into a car with your client is call your favorite lender. You call your lender, you have your clients connect with them, and they start the pre-approval process. The pre-approval is a full application. You know, we are moving into the digital age where that has become really easy. I mean, you've heard the Rocket Mortgage, you know, you've had the Quicken Onlines, well, Caliber as well. We have, within 15 minutes, they can have their application, pull their credit, have their assets approved, and have their income documentation uploaded. So not to get off topic, but the pre-approval is your income documentation, your asset documentation, and your credit. And then we take that a step further and we run you through our automated underwriting system. Because you know, today it's very competitive out there. So you want that piece of paper you're holding that says our clients are pre-approved to mean something. And so when we run you through our automated underwriting system, we get an approval. And that is the difference between being approved or pre-qualified. Approved is a full pre-approval. It makes your shopping, it makes your pre-approval letter very, very strong. And when they contact the lender, they can with all certainty let them know that this client is well prepared for this transaction.
Wonderful, and you're right. And that thump you heard was her throwing me under the bus. If I'm a buyer's agent, I don't get in the car with that buyer until I know they're pre-approved. It's really, really critical. I've listed and sold about 1,000 homes.
Wow.
So my mindset is always on the listing, and so I immediately think, get this dog into escrow, let's get it done. So you're right,
Absolutely. It's
So,
giving you a hard time.
yeah,
Right.
different perspective, I love it. So anyway, we talked a little bit about pre-approval and the value of having pre-approval. When you're in a competitive situation, how does pre-approval work with or compete against cash transactions? So let's talk a little bit about that.
You know, I'm a lender, and so I have a lot to say about the cash transaction. Your seller is going to have 100% of their money, whether they're doing a 3.5% FHA loan or a 100% cash transaction. They are going to get 100% of their purchase price. So, in my opinion, there is no difference. Now, I know that with a cash transaction, it makes things easier. You can move along maybe a little bit quicker. But the money is the same. You know, if your client is well qualified and they're pre-approved, and you know that you're going to take them right through that loan process in 25 to 30 days, you know, I say why not give the chance to the first-time home buyer that wants to make their mark with home ownership.
100% true, and that's what I was hoping you would
Yeah.
say. The money
I have a
is the
soft
same
heart
either
for the
way.
first-time home buyers because it's competitive out there. And a lot of them are FHA buyers with 3.5%, 5%, you know, down. Anybody doing a loan with under 20% down will have some sort of mortgage insurance. And that speaks volumes to them. If they're willing to pay that, you know, to be a homeowner, I say they get a chance. So I don't know what else to say about cash transactions.
No, I think that was excellent.
Yeah.
So let's flip to the insurance side of the equation. We've got fire zones, flood zones, all these type of things that could hinder your ability to get insurance on a property or make it more costly. So how early in the process should a buyer be seeking out and getting quotes on homeowners insurance?
Well, it really depends on the buyer itself, but you know what? I normally say leave a couple weeks, 2-3 weeks, although we can do it last minute and there are some agencies that can, but you don't want any hiccups in the process. Oftentimes it's whether flood policy is required or not depends really on where the house is located, whether it's in a flood zone or not, because the lender is going to require that in addition to the normal fire policy. And so also if your client is coming with prior claims history and all that, that's challenging. So then you got to make sure that, hey, is there enough time to find some other avenues out there, because there's always a place for insurance for somebody. It's whether they get a preferred policy or not. Some of our examples here in the foothills and whatnot is that if your buyers are not prudent and being proactive in finding insurance, they may be told the first time that, hey, you know what, you're up in the foothills, you can't get insurance with the preferred company, we got to put you in a fair plan. And that might not be the case, because there might be another company out there, another carrier that might have an appetite for that policy to be in a preferred one. So never ever just take the first no for your answer, especially when you're up against our foothills. And then if you are up against our foothills and we're in a brush type situations, we have to oftentimes go to the fair plan, and that we can't bind it right away. We need several days. The client has to pay the cost of the insurance before we can even give escrow, what we call the evidence of insurance. And so again, I always say it's good to go 3 weeks before, and then have your clients come back the week before it closes to check, hey, can your company still provide the insurance and bind the coverage, because maybe the answer was yes, they could have 3-4 weeks ago, but because of the recent fires and all that, maybe they've become a little bit more restrictive and have pulled their agent's binding authority.
Wonderful. So let's talk a little bit about the transaction type that's very, very common. The seller sells a house to the buyer but wants to stay there for an extra 2 or 3 or 4 weeks or 3 months or what have you. How does that impact the insurance for the buyer, who's now a landlord, and the seller, who's now a tenant?
Okay, the correct way to do that is when you have, you know, whether somebody's doing a rent back for a month, 2 months, 3 months, 4 months. Insurability wise, I have to put a homeowner, and a homeowner means that the buyer is actually living there. So if the buyer intends to live there in 3 months, technically with all insurance companies, they should be buying a landlord policy and having the client, the seller, getting a renter's policy, because they need to be protected in case somebody gets injured on the property as a result of the tenant being negligible, and so that protects the buyer themselves. And so where you run into problems is that an insurance company does not have to afford coverage if you bought a homeowner's, if your buyers have bought a homeowner policy but yet aren't living there, technically the companies do not have to afford coverage, and then that leaves you guys in a very vulnerable situation. It also leaves your buyers in a very vulnerable situation. The only problem with that is that if a lender is doing a homeowner loan, and I'm giving her a rental document as a landlord or a policy that shows that it's not a home insurance, that's going to raise some flags. So there is some issues, and that's not so much with the insurance as much as the lender that's involved in that. So I don't know how clear that I need to be. When you are in that transaction, oftentimes, if it's a few days, you're not going to be in an issue. But if you're talking about any time where you're going to go into 30 days or more, you have to put the right policy on.
So Cal, how do you handle that? You knew that was coming.
I did, yes. So when you're doing owner-occupied property, you can rent back that property for 30 days. Now, there's different lenders may have different rules, but we're typically 30-day rent back. And so if we saw something more than that, it would raise some red flags. There's different ways to get around that sometimes, but typically when you're doing an owner-occupied and you've stated that you are going to be living in that property, you cannot rent back the property. There's a 30-day concession for the need for the seller to get out, but pretty much that's it. And I'm just going to reiterate what Mark said. As a lender, when we have a purchase contract, the very next question that I have is, who is going to be your homeowner's insurance agent? Because we are going to want to order that quote right away so that we can see it and we can start getting it into the process. You're going to see there's a lot of crossover between what we all do. It's why you need the right team behind you, so that you have all of your ducks in a row and make the transaction as simple and fun for your clients as possible. Because it's not easy anymore, right? It's not easy anymore. It's a lot of paperwork.
It's real easy for a deal to fall out. It's easier for it to fall out than it is for it to close. So there are challenges, and it takes skills. So Mark, I want to continue with you, if you don't mind. Talk a little bit about homeowners associations, condominium, and the different types of policies, and so on, the master policy as opposed to
the HO6.
Right, correct.
So oftentimes, fortunately right now, when you guys are selling or buying, having a transaction in a condo transaction, and there's an association on there, if there's a loan involved, you don't have to worry, because you're going to be forced, your buyers are going to be forced to buy a HO6 policy. And here's the difference. So when we're dealing, and say there's 40 of us here, and let's just say we have a 40-unit Arcadia HOA right here, all right? There's going to be a master policy that covers all the common structures, the common walls and whatnot. And that used to be, 7-8 years ago, that used to be the only thing that was required. you know, whether it's from Escrow or from, the lenders, and Escrow would basically just want an evidence of insurance for the master policy. Then, because of the 2008 and all the claims and the defaults and all that, they came back and said, you know what, we're going to need, anytime there's a loan on the policy, we're going to need a HO6 policy, which is a separate condo policy that now the lenders require. And basically, all the lenders across the board are requiring insurance companies to put 20% on that HO6 policy, 20% of our coverage to cover the dwelling. And what that means is that when you have a master policy, the CCNR says that the dwelling part of it covers all common area. But anything that's in the individual unit's responsibility has to fall on the HO6, all right? So how does that affect us here? Well, not all condos are the same. So some condos will say, hey, we pick up everything, anything that's a structure that you can't pick up and remove, like a carpeting, interior wall, cabinetries, and all that. But once you make the change, then it falls back to the individual buyer. Other condos say, okay, well, we'll cover up to the wall in. The CCNR says that. But anything from the paint, the drywall out, that's the responsibility of the individual owner. So that's what falls on the HO6, all right? Also, what happens is that in the event that say that the condo, Frank has one of the units and his burns down, and he can't stay in that, and it's going to take 10 months to rebuild, the master policy is going to pay $0 for him to move out someplace else. Whereas that separate HO6 that is now required would pick up to 12 months of his coverage to be put someplace else. He also has individual liability that the master policy doesn't cover. So in the event that somebody gets hurt within his unit, or he causes somebody to get injured, even though it's in common area, say he's leaving his bicycle out and somebody trips and falls on it, all right, a good attorney is going to sue not only the association because it was in common area, but they're going to sue Frank because he was negligent and leaving his bike out in a walkway without signs, whatnot. And so if he has that HO6, that affords him $100,000 coverage. Right, poor Frank. The only problem though is that many of you guys are dealing with cash transactions. And when it comes to cash transactions, HO6 is not required by the lender, and therefore Escrow won't make sure that they have it. But it's prudent for you guys as realtors to insist on that, just because of the things I've said, because I have a script where I can show you where it's not that expensive to buy this separate policy, but there's so much exposure because there's so much gaps that the master policy doesn't cover.
So on July 4th, there was a big fire up in Chatsworth in the community that I live in, right across the street from my house. 3 units were destroyed, and the fire started because of a barbecue that was left unattended. Apparently a hole ruptured in the hose, and it shot the flames straight up into the eaves, and then the fire ran across. It made all the news. The person who owned the barbecue, whose unit was involved, didn't have the HO6. So the association is rebuilding the exterior, but he has no coverage for the outside. So he's taking a long shot. He's suing the manufacturer of the barbecue.
There's not going to be anything covered.
Hoping to recover some of that. But
I forgot to mention one more thing. There's something called loss assessment that's really important in a HO6 policy. I had actually our Arcadia property manager about 7 years ago. One of the wives of, and I won't name the person, but one of the wives of our former president, they lost a condo unit, 5-unit condo unit, and they found out that there wasn't enough coverage to rebuild. So they were a couple $100,000 short of rebuilding. So what they do is anytime there's a shortage on the master policy, they'll take that amount and divide it by the number of unit owners and assess each unit owner. The HO6 will pay up to $50,000 of that proportionate share. So it's quite a good policy to have, and again, it's prudent because...
And it's not costly.
And it's not costly.
It's not costly.
wonderful. So now we get to pick on you a little bit. When a deal falls apart, typically, or a great opportunity for it to fall apart, is during the inspection, the due diligence process. How early in that 17-day timeline should a buyer schedule you to, or your company to come out?
Usually the early is better, because once your offer accepted, so you need to order your inspection. So inspection company usually will take 3 days and to schedule for you, and the report came out usually like take 24 to 48 hours. So you have to calculate your time. So you have 17 days, and you must schedule at least 3 days ahead.
So tell me what kind of things that your inspectors are looking for as they go through and do their inspection.
Okay, so inspectors usually has a visual inspection, visual. So they can see, they know. For the mainly is 5 major items, like a roof, foundation, electrical system, plumbing system, and heating system. So this is major 5 items. If this property has a pool, of course, or including pool, but pool inspectors do not inspect leaks. And also this property and between, like windows, doors, flooring, kitchen, bathrooms, also will inspect.
Okay, so my experience in transactions is that sometimes the buyer will utilize a home inspection as a big shopping list to get everything and anything done on the property that they possibly can. Tell me how you guys address issues when you're discussing with the buyer your findings. How do you address them? Do you prioritize them, or talk a little bit about that?
Okay, so inspector, when you inspect property, they mainly to talk about 5 major items. So do not inspect the inspector to tell you everything in the house. So because some hidden stuff inspector couldn't see. If you couldn't see inside of a wall, inspector couldn't find out the problems. But they mainly talk about, for example, this house, if you talk to your buyer, have made mainly measure 5 items I mentioned. Roof, if this roof has issue, the foundation has a problem, like a bigger cracks, and the structure issue, and or plumbing is very, very bad plumbing, and like galvanized, very corrosion case area or something like that. Or heating system, AC is not functional, heater not functional, and electric system, the electrical like very old. There is a record electrical panel, something like that. Those kind of major stuff maybe impact your transactions. But inspector will explain to you which one is major problems, you have to solve that, or which one just cosmetic. So no big deal, doesn't impact your transactions. So some like foundation issue, this is repairable. So do not worry about, big cracks, there's problem, maybe we are deal has problems. No, some can be repaired. So no, but on a major issue group you are deal is the foundation. Based on our experience, foundation issue is a mainly problem. So when you deal with that, inspector explain to you what's the problem, what kind of stuff we can solve, and if need further evaluation, they will recommend to hire a structural engineer.
Wonderful. So you said that you don't go inside walls, but I assume that if you see evidence of moisture, you'll call that sort of thing out. Tell me the type of areas in the house that you would access and the type that you would tend not to access as your inspector goes through the property.
Okay, so inspector, usually inspector hires experienced inspector. So they know there's stuff or there is a sign of possible happen. For example, and they look at the ceiling. Even homeowner repaired, and then they have special flashlight. They can see this ceiling area already repaired. So they suspect maybe roof leak, maybe bathroom shower panel. So they won't tell you it happened before or happened currently, but they will tell you, said, okay, you need to check the roof. If they go to the roof, look at the roof is okay, but maybe you need to ask the seller the history. What happened about this situation happened? So inspector or judge or give you for more information need you to further evaluation. So for this example, most churches, something like that, they can say, maybe they think about this one maybe could mold. So they recommend to you do the mold inspection. So the experienced inspectors will give you more details about the, further evaluations. If there is no problem, they will tell you, oh, this thing just happened before, don't need to worry about it.
Wonderful. So I'm going to go back to my favorite lender. And I want to talk a little bit about the process because the process has changed. I remember when I got my first home loan back in I think 1980, the loan officer called me up and said, hey, we need taxes that show you earn this amount of money. And I said, but I told you I don't make that amount of money. He said, no, you just need to come in and sign these tax forms. We've come from there in 1980 to where we are today, and we have a whole new language. We have TRID, and we have CDs, and we have all these things. Tell me a little bit about the process now that we've been pre-qualified, we've opened escrow, we've done our preliminary title, we've found insurance, we've done our inspections, and we're staying in the deal. And now everything falls back into your lap. And talk a little bit about the underwriting process and the role that the loan officer plays, the underwriter plays, and the final determination on the loan.
Okay. Gosh, it's a process. So he's absolutely right. Things are different. Luckily, I was not in the industry when that was the case, because I do think that the regulations are there for a reason. It's to protect the consumer. So when the file comes back to us, we now have a purchase contract, we've got a deal, we've got, 12, 17 days to get our appraisal contingency off, our approval contingency off, we have to get going. So the very first thing that we do, because now our file is ready to go, because they were ready to go when they were pre-approved. So we have to generate disclosures. And this is where TRID comes into play. So we have 3 days from the time that we identify all 6 key points, which is the property, the purchase price, their social security number, the name, etc., to send out the loan disclosures. Those loan disclosures are prepared. Most of the time, those can be signed electronically now, which is good. They can be acknowledged electronically. Once those are acknowledged, we order the appraisal, which is, I know, what is probably the most important thing for you guys in this room to have happen. The disclosures are originated, they're signed, the appraisal is ordered. We as the loan officer, the loan originator, are telling the story now. This is what the application is. It is the story that we are telling about your client. Are they a W-2 employee? Are they self-employed? What does their assets look like? What does their credit score look like? We're telling that story. We are packaging it together and we are sending it to our underwriting team who is going to make the determination. Once the underwriting team gets that file, they're going to go ahead and cross-reference everything that we have provided. The tax returns, they're going to go to the IRS to make sure the tax returns we've provided are actually what your clients have filed. So we have a check and balance. That's happened through all the Dodd-Frank laws. Things have changed, tightened up a little bit. The underwriter reviews everything and comes back to the lender with the conditional approval. And the reason I call it the conditional approval is because until we have that clear to close sign and we're ordering the CD, which is the closing disclosure, we call it a conditional approval because 9 times out of 10 there's something that they're requiring, whether it's the escrow forms, a copy of the insurance, something on the title, something that the inspection report has dictated for us to do. It's not cleared to close. But once we get that cleared to close, we order the CD, which is the closing disclosure. And as you know, because of the TRID laws, there is the 3-day wait on the closing disclosure. So from the moment the client signs the CD, they cannot sign loan documents for 3 business days. you have any questions about that, or what else should I elaborate on?
No, I think you're doing a really good job.
It's a lot to cover. Did you want to ask? Go ahead.
Out of curiosity, the submitting of the tax returns to the IRS, does the IRS respond with a copy of the tax returns, or they just confirm or deny?
So what the IRS does is when your clients open the loan, they're filling out what we call the 4506T. And that is a request for transcripts. So what they're doing is providing us with a copy of the transcripts.
Okay, so not the actual tax return?
No, it's transcripts.
Got it.
So my question to you would be, because when TRID first became our reality, there was panic. Everyone said, write 60-day escrows and pray that you can get it done. How has TRID impacted the transaction, and what do your timelines look like? Are 30-day escrows viable or realistic? Talk a little bit about that.
You know, I have to be honest, I think 30-day escrows are very realistic, very viable. Again, it's all about communication and preparation. If you're prepared with your client and you open escrow, you should have no problem flowing through with TRID. There's the 3-day on the beginning, the 3-day on the end, the 7 days in the middle. But it flows nicely. I think that as long as you have communication with all the parties involved and you're prepared, I really don't see a problem. It's a good thing, the 3-day CD, because by the time they acknowledge the CD, they have a chance to look at all the fees, escrow balances, and then where we have picked up the slack is our funding is smooth. So you're really ready to fund when that CD is acknowledged. So it's just replaced the funding review with it happening a little bit earlier.
Wonderful. So,
Somebody has a question back there.
Yeah, the 3 days, is that almost like a cooling off period?
It exactly is a cooling off period. It's exactly a cooling off period. And I actually asked my partner, I said, they threw us a question that says, well, what does that mean and why do we have it there? And he goes, I dare you to say, call the Obama administration and ask them why it's there, because there is no answer. We don't know why the 3 days is there, but I think it's because it's a cooling off period, so the client has a chance to look at their fees. Don't forget, now there's the fees they can shop for. So it's just a cooling off period. It gives them a chance to look at the CD.
You said fees they can shop for, what do you mean?
So on the CD, on the opening disclosure, there are fees now that the clients can shop for. The third-party fees, the title, the escrow. There's fees that they can theoretically shop for. I don't know that a lot of them do, but they can. I mean, they can. Yes.
Would that slow the process down if they?
Absolutely, absolutely.
So
the reason is because now, with part of the new TRID law, we have to work hand in hand with escrow, so we get a purchase contract. Mm-hmm. We used to just send out the disclosures, but now we have to match our loan estimate fees with that of escrows, because you have to remember, the burden is on the lender. So if we under disclose by a certain percentage, we cannot charge the client for those fees. We cannot ask escrow for those fees. We will eat those fees. So typically you're going to see the lenders over disclosing quite a few of those fees for the initial disclosures to protect themselves and the client from being incorrectly charged.
Yeah, it was very common that fees were underestimated, misrepresented.
Absolutely.
And when you got to closing, all of a sudden there was this sticker shock. Mm-hmm. So I think that's a good thing. And I think the 3-day period that you have once you get the CD kind of takes the emotion out of it, because we want the house and we want to do this, and you've approved us, and that's such a good thing. So it takes some of the emotion out and allows you to get back to that business mindset and look at the numbers and understand your costs. So
sure, absolutely.
So rate TRID and the changes made to our industries, and being highest and one being an abomination, where would you put it?
Personally, I put it at a 6 or 7 because it's just keeping everybody compliant. it's keeping everybody compliant and keeping everybody on their toes. So in the beginning, yeah, there was the panic that we need 45 days, we need 60 days. You guys, it's all about education and information. So if we all know what we're doing and we're organized, we're not going to have a problem. If you're working with the right lender who is compliant and who's got this system down pat, you and your clients are going to have a great experience.
Okay, so now I want to go back to escrow. You said something that made me want to hug you. You said you don't send out the instructions until the buyer sends their earnest money deposit. And a friend of mine who's an agent in another company just closed $6.5 million deal, so it wasn't a small deal. And the EMD wasn't in 3 days before they were supposed to close. Escrow didn't say anything. The TC knew about it. They didn't say anything. And so down the line, there was a breakdown. So tell me, walk me through that process, how you handle these things.
Well, that's an office decision. I don't think that all escrow companies probably hold the paperwork until the deposit comes in. But I have found over the years that sometimes people have a change of heart and you're typing up these instructions and getting this package ready, and then they change their mind and it cancels. So our decision is to not send out the package until the good faith deposit comes in. And then the paperwork goes out. And then we're usually contacted by the lender because they need their fees right away for their for their disclosures. So we call title and get the title policy fees and so on and so forth, and send them an estimate so that they can do their paperwork. What was your other question?
So what's your process in terms of notifying the agents and communicating that there's a breakdown and the contract terms aren't being met?
Well, if the money doesn't come in, or we don't have any communication with either the selling agent or the buyer within I would say a day or two from the opening of escrow, we notify the agents that the money's not come in. And we let them know immediately, because that's a really important issue. That would never happen about deposit coming in 3 days before closing or whatever that was.
Well,
that wouldn't happen.
If you had a loan, it wouldn't happen anyway.
No, because the lender needs a receipt right away anyway. They need the initial deposit, copy of the receipt for the funds. So having the money come in is really, really important. And we will call the agent if we don't hear from the agent, and we will send if they choose to wire, we'll send the wiring instructions so that we can get it. And we notify everybody that the deposit has come in when it's come in.
Wonderful. I think if this panel's missing anything, it's missing a realtor, because I think we're also a part of this. So if you don't mind, I'll play the role of realtor. I'll pretend to be one. And just say that that's my highest priority on the listing agent, is to make sure that money comes in, because I don't have a transaction in my mind until they have skin in the game. Seller has skin in the game. Seller, in this case, $6.5 million, was doing a number of things. They were doing some repairs. They were handling some title issues. They were handling some zoning issues and stuff like that, so this property would all sell. So they were putting a lot of money out, and the buyer hadn't brought his money in, and he could have walked, and he would have just disappeared in the wind. So my advice was to that agent that you give the buyer notice to perform, and make it very clear that you're going to cancel the transaction, move on to somebody else, and that ended up working. But to me, it's critical that when we form a team, when I'm working with my insurance agent, my home inspector, my title company, my escrow, my lender, that we're all communicating, because we have to watch each other. So now I'm going to transition into an area that I think is critical, especially today. We're seeing all kinds of issues with false reconveyances and just funky kind of stuff out there. Tell me from your process, and I assume you probably come into it too, but more particularly, I think title and escrow notice things. When does the red flag go up? What do you look for? How do you address it?
For reconveyances?
Well, all kinds of issues. We have We have
Well,
buyers deeding property to themselves and then turning around and selling it. So talk a little bit about it. We have a company over in LA, and a West Coast company, and they were doing a number of transactions where they were deeding the property or providing a reconveyance and then selling the property. And somewhere along the line, title has to catch it, escrow has to catch it, someone has to catch it. So let's talk a little bit about those issues. What red flags do you look for in a transaction that would trigger your radar and want you to engage at a different level?
well, first of all, we would look at the preliminary report and see what's on that report. We would also compare that with what the seller's opening package has, which is a form that states what they owe, approximately how much they owe, who they owe it to, and so forth. So we would match that and make sure that we're okay with what we have to pay off. Unfortunately, nowadays, there is so much fraud going on. We went to a California Escrow Association conference just a week ago, and the speakers on fraud were unbelievable. It was wire fraud, I mean, all kinds of fraud. So you have to be so careful. Your notaries have to be careful. When you send wire instructions out, sometimes those wire instructions will get hacked and money goes to the wrong place. So you can't be too careful when you're dealing with people's money. I mean, that's what we're entrusted to. And we're just very, very careful. We're very, very careful.
Yeah, I actually got an email the other day that said, subject matter, your escrow, and asking me to send the contact information, and it was easy for me to figure out it wasn't a fraud because I have no escrows.
Well, emails, I mean, we get a lot of emails that are fraudulent. We just delete. I mean, sometimes if it says to recipients, you know that it's not to you. We don't open things that we don't know because it's disastrous, really.
And you guys are encrypting your emails too.
Yeah, oh yeah, our wire instructions. Now, some escrow companies don't even have the account number on their wiring instructions. They require that you call in and get it. And also when we're wiring out sellers' proceeds, some companies require that be notarized. We don't at this time, but if you have a last minute change, the seller is calling and saying, you know, I've changed my mind, I want it to go to another bank, you have to be very, very careful. And you would probably want to get that notarized. And we don't take wire instructions on email either. So there's just certain things that you can do to try to circumvent any fraud. Yes?
So in regards to the business email compromise, what is the industry standard right now for the two-factor authentication?
For the what?
Two-factor authentication. Do you have something in place to ensure that you're actually getting instructions from a legitimate party?
Well, we have on our instructions that they're to call us, okay? Before they wire even.
And where do you get that phone number from?
The phone number from the client?
Yeah.
Usually from the agents.
Okay.
From the agents, and then we send encrypted as well.
So,
He has something back there. Go ahead.
Yep.
What about electronic signatures? We just recently did a transaction where the bank didn't want to accept electronic signatures.
Yeah. Well, some lenders don't. I don't know, Cal, about you, but some lenders do not want those electronic signatures. Or with the loan documents, there's a form that they can sign saying that they have signed electronically, but they're doing a regular signature on this form. I'm actually kind of old school. I like the wet signatures in my file. I don't like a file of complete electronic signatures, but that is the wave of the future, and so we have it covered in our general provisions. But to me, it's always best to get a live signature.
yeah, I think from a practitioner standpoint, we have an obligation, and our core value in the transaction as realtors is to be able to communicate and explain and put into a context that our clients can understand what these forms and disclosures mean and how that impacts their transaction. And I think that while I absolutely love the convenience of digital signatures, I think that we're abdicating some of our core value, and because we're not explaining, we're sending it out and we're telling them, read it, review it, call me if you have any questions. And I think over time that could end up devaluing some of what we do. And so we have to be really careful about that. But when I did my refi, everything was digital. I got these encrypted files that open it up, click here, click here, click there, and I was done. And so from a practical standpoint, I love it. But from a liability as a broker, office broker, it scares the heck out of me because my agents should be explaining what these forms are. The client doesn't have the same context of the forms or the information that's being disseminated that we do. So you have to be careful with that.
I was going to add something about the signatures too. So now with the lenders, the disclosures, you can sign them all electronically.
Right.
The loan documents, though, you cannot. Those still are signed in person in front of a notary, which I think is important. Even on the disclosures, I can tell you the more successful the transaction is, it starts at the disclosures where even though they're signing them electronically, we still have your lender still spend the few moments with them over the phone explaining them to them. Let them go through it with them. So.
Wonderful. So I want to continue the project and move over to title, because you guys are kind of engaged. If you can't convey clear title, you're not going to insure, which means she's not going to lend, which means everything falls apart and nobody gets paid. So what kind of challenges are you facing, and what are the red flags that your industry looks for?
Well, first I wanted to piggyback on what Terry was saying on the wire fraud. So all title company now, when we issue the preliminary title report, we no longer including the wire instruction on the preliminary title report. I could just share with you what happened to my operation last month in San Diego. So it was a wire fraud. Somebody pretend was the escrow officer, called the buyer. So they had to wire $50,000, and they did. And then that money was gone. Okay, so now we strongly encourage either the seller when they wanted to do the proceeds, or the buyer's gonna wire the funds, we would strongly suggest them to call the escrow to reconfirm, because you never know. Now the criminals, they are so high-tech. When the escrow team, they send out the email, within a second, they can change the email content and then send it out. And when they wire it out, the money instantly is going to be overseas and you cannot retrace it. So it's extremely important. On the red flags on titles, when you have a preliminary title report on how to hold titles on the vesting part, let's say will be Mark Wu, Annie Fan as a husband and wife as a community property with the rights of survivorship. After that vesting, if you say subject to, SUBJECT, to TO, subject to, and then it's going to tell you what item will be item number 5, item number 10. You know immediately on your prelim there's going to be a red flag on it, so you need to pay special attention. What was that? It could be uninsured deed. So what is the uninsured deed? It could be like, let's say Mark and Annie, we're husband and wife, and then I did quick claim.
Such a cute couple.
Isn't it a cute
Or we can say, well, me and Terri, we're two investors, will be joint tenants. So I did a quick claim, but it didn't go through escrow, it didn't go through title. So title company would consider that as an uninsured deed. So we need to verify it. Why? Because out of all the real estate fraud, 1/3 of them happening in California. So title company, we're extremely cautious. So we need whoever, let's say I did a quick claim, they need me to fill out the uninsured deed affidavit form and get notarized and then turn it into a title company. So that is uninsured deed. It's
we see that a lot. And another thing is the mechanical liens. So we see a lot of new development in Arcadia, the mega mansion. So whenever they finish a new development, supposed to be within 10 days, the seller or the builder, they need to record a notice of completion. So when you record a notice of completion, that within 90 days, if you have a transaction escrow happening and you want to close within those 90 days, title companies, we're going to ask the seller to provide an indemnity applications. What that means is we wanted to make sure if there's a mechanical liens arrives, the seller, they have enough funding to eat that loss, okay? So what it does is we're gonna ask the seller to provide their financials, provide us the bank statements, maybe the last 3 months of their bank statement, making sure they have enough fundings. We need all the cost breakdowns. What that means is if, you know, what jobs was it been paid, we need all the unconditional waivers by the contractor, the general contractor, and all the subcontractors. And the pay information, making sure all the jobs has been paid. Then the seller has to fill out the indemnity applications. So all that, when we get that information from the escrow, then we will submit it to our underwriting process. And typically, we can turn around within 24 hours and let you know if we need additional information or not. So that's what we have seen a lot in the new developments in Arcadia, okay? The third thing is either the judgment or liens. Whenever we have seen that, then typically escrow is gonna draw demand and contact the lien holders or judgment holders. If there's a list pendant, a lawsuit, then the same thing. The escrow, they are doing majority of the work. They're gonna contact to, let's say if there's an attorney to find out what does it need to solve it to get the release of this list pendants, and then we can report it. So that's what we have seen a lot on what it might delay in your transaction in terms of the red flags.
Thank you, I appreciate that. So I'm going to go back to Mark and insurance, and I want to talk a little bit about California being on fire. I mean, we had on fire, the Canyon fire, we fires all around us. So I'm a homeowner, or I'm a home buyer, and I'm buying in one of those communities. My house wasn't touched. How are my rates going to be impacted? And is it a short-term hit or is it a long-term hit? Talk a little bit about well, we've had hurricanes, we've had all kinds of stuff. How do those natural disasters and unnatural disasters impact the insurance industry, and how is that passed along to the client?
Well, you guys won't see immediate impact on that, but as far as how we are, first of all, the natural disasters, like what happened in the Texas region and all that, the insurance companies weren't on the hook for that because most of them were not providing flood insurance. It was a national plan, so it's coming back to, unfortunately, the national government. So in that aspect, they're not affected. But where they were affected was they lost a ton of cars. And by the way, don't buy a used car from anywhere except California. No, seriously, many, I know that's off, but there's a thing that many of those cars were totaled, right? Because as soon as salt gets into the cars and all that, everything is going to be messed up. So companies are buying those used cars and trying to resell them in areas that are not in that impacted area. And so just a public service announcement. The other thing is how do the fires impact us here? It impacts us in many ways because remember, insurance is there to be a profitable entity. If they're paying out more than they're collecting in, they at some point in time, they will not be in business, the companies. So what they have to do is then start raising rates and all that. So you might not see it in the next 6 months or whatnot, but you will see that the companies that had major catastrophes and major losses, it will impact their bottom line, and so the impact of rates will go up. The other thing that you have to be more worried about is the restriction, because you'll see companies that maybe say, you know what, California might not be a great area to be in because We've gone through 5 years of drought, and so our hillsides and all are very combustible, meaning that it's going to catch on fire a lot. That's why you see it all happening right now, and it's like, why are all these fires happening? You know, is Armageddon happening in California or whatever? But no, it's just because we go through those series of cycles, right? Because the brush gets burned down, and then it takes another 5-7 years of growth. Then it gets dried, and then it goes through like that. So the insurability is going to be more of an impact than rates, and rates is going to be proportionate. Based, it's not going to be if any one company says we're the cheapest, they're lying to you, because none of us would be in business. Everybody has a competitive area depending on how their losses are in, and it's not just based on, okay, are we competitive in California, but there's area like LA and whatnot. Do you want me to talk a little bit about earthquakes, since you talked about natural disasters?
Absolutely. We're way overdue. I don't think anyone thinks we're not.
So as I mentioned, in the Texas region, when that hurricane hit, there was only 1 out of 10 people, or 10 out of 100 people that had insurance. So basically, the other people, the other 90%, basically are on their own. And many times they feel that there's a misnomer out in the insurance industry that FEMA, the Federal Emergency Management Administration, the government entity, is going to have money to rebuild. All right. And if you've been following all along with the devastation that happened in Texas, in Florida, and in Puerto Rico, they're out of money. They're way over budget. That they don't have the money to even give out anything. So normally what they do is they come in and they give emergency fund. They'll give you daily living expenses for 30 days, maybe a couple months, food, fix up here and there. But that's it. They'll give some small loans of 10, 20, 30,000. There's no way they have enough money to rebuild. Why do I bring that back here is because in California, we have that same exposure, but it deals with earthquake. So your lenders never, at this point, still don't require earthquake insurance. But I believe there'll be a day where they probably will. But currently, there's not earthquake required. So I've been going around, if you've been in any of my training classes in your offices or whatnot, I always strongly suggest that you either have somebody that's on your team that's an insurance professional that can convey the severity of, hey, pros and cons of earthquake insurance, or you recommend and just say, hey, you know what, we're in a freeway system or earthquake faults, we recommend it. Because again, only 1 out of 10 people get earthquake insurance in the area, and you don't want to be the realtor that sold the home, that the home went down, because they say a 7, 8, 9 point earthquake with the epicenter is going to cause major destruction here in Southern California. That's why our rates are quite high. Normally our rates are about 1.5 times to 2 times the homeowner policy. Again, not required by the lender, but always recommended. And it is, many companies do not provide earthquake insurance. It is a nonprofit entity that's set up by the state of California. And they are able to withstand about now a $15 billion earthquake, which is not that great, but it is still better than what they could afford. A couple Northridges, basically. And if you guys were around when the Northridge earthquake happened, over half the companies went out of business because one earthquake wiped out decades of premiums. So again, it's super important. You have to buy the earthquake insurance oftentimes through your insurance carrier. So if you're with XYZ company, you can't come to me and buy the earthquake if you want to go through the California Earthquake Authority. You have to buy it through the insurance company that has a relationship with the CEA.
Wonderful, thank you. Okay, so I want to talk about, I'm going to defer to you now, but first I want to talk to the agents. I think our biggest lawsuit mitigator or shield is our Abbott. And I think we don't, as an industry, take it nearly as seriously as we probably should. I see in my own offices periodically people doing it on the last day just before closing so they can get paid. So from your expertise, what kind of things should a practitioner be looking for? And how can a realtor who's not a contractor do a thorough and valid audit from your perspective?
Okay, so I heard a lot of lawsuits about or they claims that the inspection is better and miss up the stuff. So as based on my experience, yes, if you order or inspection companies or inspectors, first of all you have to know this inspector is qualification first. So we have like a Korea or ASHI, so they must qualify by either Korea or ASHI. Second one, you have asked this is experienced or not. So at least this inspectors carry ASHI or Korea or experienced, and they carry E&O insurance or not. When you verify those kind of items, and you can go ahead and order from this inspection company to choose the inspectors. And then inspector, when they perform this inspection at the time, they follow or comply with the scope of the inspection of Korea. So they comply this kind of standard practice. And they tell you some items we inspect, some items we do not. So it's within mold. Inspector doesn't inspect mold. Okay. So most of the lawyers come out the mold and say, okay, I'm moving and find a mold in there, and they start suing inspection companies, something like that. As a realtor, inspector may tell you, oh, there is a potential mold in there, so we need further evaluation. And you need to inform your clients about the mold issue. And there's most people concerned about that. And so the question you asked about this kind of that?
Okay, go ahead.
Yeah.
So I was wondering, if we are there with the inspector and all that information comes out, do we include that in the avid?
Yes. So better included the avid. More detail is better to you as an agent. So when you visual inspection, you only see the certain items, but you do not see the details. So inspector, after inspection, they will give you presentation, tell you what's his finding, and then after that you put those kind of items into your audit.
So now I'm going to talk to you as a broker and address that question. It's really, really important that you get the avid out during the due diligence period, because something that's disclosed outside of the timelines in a court of law may not be considered a valid disclosure. And it may put you and the company at liability if there's a lawsuit that arises from the failure to disclose. So those people waiting to the last minute and just write everything is beautiful are really putting a big target on themselves. As a practitioner, you don't have to be a general contractor, but you do have to state the obvious. So if there are cracks in the driveway, we don't qualify them by saying small hairline cracks in the driveway. We just say cracks in the driveway. If there's peeling paint on a windowsill, we don't say massive amounts of peeling paint. We just say paint is peeling on this windowsill in this room. So we never add a quantifier to our avid, but we describe exactly what we're seeing. And I have to tell you, I've seen people get in trouble because they walked into a house and it had kind of a funny smell, and they didn't put that in their avid, and it ended up being a mold problem or a moisture problem that hadn't gone to mold yet, but certainly was problematic. So it's down to even something that's not visible, but if one of your senses see it, if you hear a click in a drain, you might want to note that there's a click in the drain. You don't have to determine what the cause is. In fact, you shouldn't, but you have to note that it's there. And broker that I used to work for had a policy that you had to find 3 things wrong in each room. I don't necessarily agree with that, but I think what you do need to do is make sure that you state the obvious without any value judgment or weight added to it. And if you do that, I think you'll be protected. So if I notice a water stain on the wall, or ceiling, I'm going to say, evidence of a past leak or a water stain on the wall. I'm not going to say anything other than that. Recommend you open it up, look for mold. I'm not going to say any of that. I'm just going to say a water stain is noted on the ceiling or on the wall. Make sense?
Yeah.
Okay.
So
You had a
actually-
question? Yeah.
Yeah, so, just listening to your first comment, some cracks in the driveway. How detailed do you have to get?
That's it. Cracks in the driveway. So I would not say, oh, this is California, there are always cracks. It really comes down to just identifying what you saw. There are multiple cracks in the driveway. Crack on the stucco on the east side of the house, and crack at the window joint on the outside wall. So all you do is identify what you saw. You don't add a value. You don't add a description other than that. So don't say large crack. Don't say small crack. And it's funny. I used to think that it was a really, really good idea to take pictures of everything that I saw and attach it to my Avid. And then I talked to a lawyer, and the lawyer said, I would absolutely clean your clock with that, because if I found something obvious or there's a lawsuit that wasn't in your photos, why did you intentionally avoid that? You misrepresented. So now I don't even say take pictures to identify it. You just make sure you note the obvious, and that you don't add any descriptive words to it, and adjectives. You'll be fine. Any other questions on that? And get it in early. Yes.
No, it's a little different subject though. This is pertaining to, nowadays the solar is so much evident, they're pushed out a lot. And maybe in Escrow they might indicate, broaden that. Is there problems with people who buy something that has solar and then the buyer want to change it or does not qualify to keep that? Because many times they're part of a lease maybe.
We'll open that to everyone.
Yeah, I haven't had that problem, no. A lot of times, we'll pay it off, Sometimes, the buyer will take it over. It just depends. It just depends, but we haven't had any problem.
Another estate department that I had talked to one time said there was problems with that.
Oh, really?
So anyway. Okay.
I haven't experienced it.
Okay.
I can tell you from the lender point of view with the solar, we haven't experienced a problem either. The borrower just has to qualify for that as part of their housing payments.
Oh.
So if they're gonna assume a $200 a month solar payment, that's gonna be added to their PITI, which is your principal, interest, taxes, insurance, and I guess we're gonna call it PITISs. But we haven't had a problem with it. It's been pretty fairly straightforward.
As far as insurance is concerned, if the person is leasing it, then it's not covered under their insurance policy. If the person owns it, then it is part of the structure, but make sure that either your clients or yourself is allowing the insurance agent to know that. Because remember, when I get a deal, I'm basing it based on what I'm told. So we are just determining what replacement cost is. There are some solar panels that cost 20 to 40 to 50,000, especially on these bigger houses in Arcadia that are 4,000 square feet. The solar panels are well over 50 grand to place on. And if I don't factor that cost into the replacement of it, and like the winds that we're having, and now the person's losing all their solar panels and it's ripping off their roofs, there might not be sufficient enough coverage for that. So that's super, super important, because whenever you're insuring with the insurance company, they put down how many panels that are on the premises, as a way to calculate, to just determine costs.
So I want to go to Annie on this, and this may help you a little more in depth with your question. The PACE programs and the HERO programs and those type of programs where the premium is actually paid with the taxes, and then it becomes a super lien on the property. How are you conveying title? How is that being worked? Are they now starting to subordinate and take second position? Talk a little bit about that.
Well, like typically if there's like a solar panels, lease like on the properties, it's gonna show on your preliminary title report. So then escrow is gonna draw demand, contact the solar companies, and typically, if you wanna terminate the lease or the contract, title company, we're gonna require it's called a UCC3 termination. Okay, it depends on the buyer whether they wanted to, let's say, assume the lease, and then they can do so, but title company, we're gonna work with the escrow officers to get that UCC termination 3 letter from the solar, companies. That's the key thing for that.
Are you finding that it's easier to do now? I remember when this first became an issue, probably 2002, you could qualify for that $600,000 median price home in the state of California, but you couldn't qualify for the assumption of the solar panel, and deals were falling apart then. Are they working more with you now?
I believe so. I see that more. And other things I can share with you a personal experience. So a seller, they had the solar panel lease on it. When they had it through the previous seller, so now when it was a buyer, they bought it, this property, and the seller had a lease, so they assumed the solar panel. Now the current buyer is going to turn into the seller. However, the solar company went bankruptcy. Okay, and when they transferred it ownership, they didn't do it properly, so they're kind of in a limbo position. And luckily, I would strongly suggest you work with experienced escrow officers such as Terri or someone else, because you need a great team player to help you decipher the information and follow up and talk to the solar panel company. So what happened with this escrow team, they kept contacting what happened was, even though they filed bankruptcy, they still have 2 people remaining in the company. So what they did was they tried to get all the documentation. They even actually, I think, went to the county and the city, and even to the solar company themselves to get that documentation. And that's all through the escrow officer's help. So it is extremely important that you work with a reputable and very experienced escrow team to help you to get through that.
I want to tag on that comment, because I believe if you don't have a great escrow officer, you don't have a great transaction. But I also think everyone along the line, I've got a lender that I've worked with for 20 years that I absolutely love working with, escrow company that I love working with, my insurance people, I love working with my title, I'm extremely loyal. When you build your business and you build it on a foundation of highly skilled professionals, your job gets a lot easier because you cover each other's back. So I think once you find somebody who does business and offers the same value to your customers that you do, you stay in business with them and you hang on to them, because it's a rare find. These guys are great professionals, and we're really lucky to have them in our community, very lucky to have them in our association. And you should be doing business with you guys. You're amazing. So, I want to talk a little bit about.
Somebody that has a question.
Normally, the UCC clearation takes like 10 to 12 days, isn't it? I mean, is it different when we do a residential transaction? Is it shorter, or is it?
Well, that UCC, I think maybe Terri could kind of.
Are you talking about the actual UCC3?
Yes.
Termination?
Mm-hmm.
We get it from the solar company, and we send it to title, and they will file it and record it.
Yes.
File it with Secretary of State.
And it doesn't take.
How long does it take?
Oh, it doesn't take any longer than getting a payoff from anybody else. So, a week, maybe?
Oh, okay.
Okay, so a couple more title questions for you. First of all, I had a top agent 9 years ago when I was over in Corona running a company there. And this agent came up to me with this beautiful preliminary title report about this thick, and said, okay, I've got this wonderful report. What do I do with it? Do I just have the seller sign the back page and the buyer sign the back page? What should the agents be looking for when they see that preliminary title report come along, so that they can properly advise their clients?
Okay, the first thing is, I know it sounds pathetic, but you needed to double check, making sure the property you're selling matches the ones on the preliminary title report. Sometimes things happen. We might make a mistake, email you the wrong property, preliminary title report. So that's the first page. It's going to show you who are the escrow companies, contact the title units who actually produce a preliminary title report. Then you want to look at the plant date. When did we produce this preliminary title report? If it's more than 30 days old, you needed to ask either the escrow officer, or you could contact the title rep, or even call the title unit directly and ask for an updated preliminary title report. It is extremely important. If it's older than 30 days, the report, you need to get an updated one. Then you turn to the second page. You want to look at the vestings. The vestings, whether it be, let's say, Terri and Antoun, as a joint tenants, if there's a subject to, I mentioned, is there any red flags on titles? That's the section is going to tell you if there's any clouds. That's the first thing you want to look at. If there's any subject to, is a subject to item number 5, and immediately looking over item number 5 if it's a child support lien, anything. That's the second thing you want to look at. Then when you turn to the next page, there is going to be a legal description, Exhibit A. Then in that section, it's going to tell you the APN number, the tax ID. Sometimes for the properties, it could be a duplex, it could be a commercial property, or even single-family properties. If it's a really nice luxury home, they might have 2 APN numbers. Sometimes title company, we didn't know about it, so we only run 1 APN. So we are missing maybe the parking lot or another APN. So you wanted to look into that because we might made a mistake on that. So you wanted to check to see if there's 1 or 2 APNs on your properties. Then you're gonna go into the Schedule B. The Schedule B is all the exceptions. That's pretty much telling you what are these titles conditions. Then it's going to tell you, first you want to look into delay paid property tax. Now we know the first installment is coming up for December 10th. So it's going to list it under open, okay? Then do they have any supplemental tax delinquent on the preliminary title report? It will go down to if there's any CC&R, covenant condition restriction. So what is the CC&R? CC&R means when the builder builds its tract, this communities, they're going to set the guidelines and rules for the homeowners to follow. So things you can do, things you cannot do. So for example, if the property is in Pasadena, the CC&R covenant condition restriction, when they set it up, it could back into the 1920s. So it's too, it doesn't really apply to the current languages, but it's a reference information. Then I wanted to add one information. When you get a preliminary title report, making sure you get it's called a hyperlink. What does mean hyperlink? Means that all the underlying documents, it's going to be accessed through the prelim. So there's going to be a blue underline with all the document number. Sometimes there's not a blue shaded color. It could be you just put your computer's cursor there and then the document's going to pop up. So this will give you all the supporting documentations. Then it's going to tell you whether there's an easement or not. Another thing you wanted to watch out for, if there's an easement, you could always ask for title companies to provide an easement plotted map. It's a free services. It's going to tell you, okay, this lot, maybe the top, there's going to be a public utilities and shaded into a blue color. And on the right side, there's going to be shaded into a yellow color as a storm drain easement. So easement means the right of way. So for example, if there's a public utility easement, it means it's good for maybe Southern California editors come in and out of specific section to do maintenance. Sometimes it could be underground, you don't really see it, so that's easement. Then you will kind of look into if there's any, let's say, child support liens or judgments, any red flags, if there's a list pendants, any lawsuit on this property. If you see any of these, then you needed to call your title rep or consult with the escrow officers, because they are the ones gonna pretty much handle the whole transactions and draw demand and contact to the
those lien holders and judgment holders and get a release of that. And if there's any loans, a line of credit, like loans they haven't paid it off, then the same thing, escrow is gonna draw demand and to pay off during this escrow. And one last thing for the child support lien is that don't ever think, let's say if your child is over 18 and then you haven't paid your child support, it's gonna go away. No, it's gonna stay on the property. So escrow is gonna contact the court and find out exactly, how much you accumulate for the child support lien and then pay off and get a release. So then we can get that item off.
So Annie, one last question for you. I'm a buyer and I write on the contract the seller to pay for title and I want your company, and yet I get a title bill and I have ALTA and CLTA. Just kind of wrap it all up, talk about who pays for what, why they pay for it, what the coverages do, and the difference between the policies.
Sure, so I'm going to explain to you really basic first on title insurance. What does it cover? So title insurance is really different from the car insurance. What we do is we cover the past. So I'm going to give you an example. Pretend Orlagh, she bought this property back in last year, January 1st, 2016, right? So today, I'm actually the buyer buying it. So let's say we're in escrow. Yesterday was October 23rd, Monday, we fund the loan. Today's October 24th, Tuesday, I got a key. So what title insurance covers from when Orlagh, she got the key, that was January 1st, 2016, till today, October 24th, 2017. The title insurance, we cover this period. So let's say if anything under her name, there's any lien, judgment, property tax hasn't been paid, loan hasn't been paid off, anything that happens, title company, we cover that. So let's say when I got a key today, Tuesday, then let's say after 3 years, somebody knocked on my door saying, hey, Annie, I was actually, partial owners of that property. Let's say maybe Terri came up to me saying, she and Orlagh, they were, partners, they own that property. But then how come, now I'm the owner? Don't worry about it. That's what happened with the CLTA. The CLTA policy stands for California Land Title Association. It's a very basic policies. And sometimes agent will be worried about, should we get the ALTA or CLTA? Don't worry about it. Why? All title companies now, when we issue the title policy, we're based on the property type. So if it's condo, townhouse, single families, residential 1 to 4 units, automatically we will issue the ALTA policy. What does the ALTA stand for? It's American Land Title Association. Sometimes, other title company could call it Eagle Title Policy. That's the most comprehensive policies. So CLTA is very basic. It covers the biggest thing will be like forgery, the fraud. Somebody owns the interest of the properties. CLTA policy, they don't even cover under the mechanical lien. So ALTA policy, I would say the two major things you want to watch out. ALTA policy or Eagle Title policy, they cover mechanical liens. That's really important. So let's say if you have any dispute with your contractor, you bought the house and you think they didn't do a good job, you withhold the last payment, then the contractor got pissed off and then they could place a mechanical liens on your property. Okay, but that's a separate issue. But then ALTA policy, the Eagle Title policy, it covers mechanical liens. So if the title company, we run the preliminary title report, there's a mechanical liens pops up, then the seller, they need to eat that lien, okay? That's the first thing, the mechanical lien. And then there's encroachment. So let's say if the fences of your property encroach the neighbors, if we didn't know a title company and we transfer the title and later on after 5 years there was dispute and then we realized, hey, we made a mistake and then we will eat that loss. But let's say in the escrow, then let's say the buyer found out or suspect there might be an encroachment, the fences through the subject property you're gonna purchase, you could tell the title company saying you want an inspection report. So what we do is we will send out the inspector to come to the subject property to do a visual inspection.
and that's gonna cost $75. They're gonna take pictures and they're gonna write out a report. Typically, the lead time is about a week, and then we'll kind of explain and let you know based on the visual inspection. We're gonna look at the property lot line, on the ground to see if actually there's a encroachment on the fences. If there is an encroachment on the fences, then title company, we're gonna put that under the title policy as an exception, so we were not gonna cover, okay? So that's kind of the main differences. But then do not need to worry about whether which title policy you needed to get, because title company, we issue the title policy go by the property type. So for residential 1 to 4 units, single family, condo townhouse, automatically we issue the ALTA, American Land Title Association, the policy, and that's the most comprehensive one. And thank you.
Questions?
Here's a question.
Oh,
Yes.
The one you talked about a while ago, the blue links, when we click there's an additional
Yes, that's
information.
called the hyperlink prelim. So let's say it doesn't matter if you're on the buyer side or the seller side. Whenever you get the preliminary title report, you want to make sure you get it from the title companies. It's called a hyperlink prelim. Yes. So all the underlying documents, so let's say if there's going to be an easement, if there's going to be a covenant condition restriction, CC&R, they have this either the blue underlined line. So when you click on that, the document's going to pop up.
Yeah, my question is, do I print out those two for my buyers?
Well, that's a reference documentation. So, you could, I guess, I think we're on the real estate side.
As
If
a
you
broker.
want, you should have it.
Yeah, I would tell you, you're always better off over disclosing than under disclosing, but you certainly should have that documentation so that if there's a question, you can provide it.
Yeah, because I have a client right now who is elderly, so they don't use the computer. So I have to print out everything and show them. So it's better that I print.
Aren't they the worst? No email, no computers. How do you do business? It's
Yeah,
hard,
I have to go to their house.
You actually have to
and
go
sign.
there.
Yeah. So what's your advice?
I would say that if there's an area of concern or something that needs clarification, providing that documentation. You have to be careful when you're the practitioner. You don't want to be the source of the answer. So if there's a dispute between the MLS square footage and the county records, you don't want to be the person to determine who's right or who's wrong. You just want to give the people enough information for them to do their own discovery and advise that they do. So by having that alternate source and saying, this is what showed up, and again, not adding any value, but explaining where you need to what the document is, you then have empowered them to do what they need to do and make the decisions they need to. So you always want to avoid being the source of the answer, but you want to point them in the direction where they can get the right answer. So, make sense?
Thank you.
Yeah.
I have another question regarding the AVID. What if the other party does, like, you're past your due diligence period and they haven't given you your AVID yet? And you keep requesting it, but they don't give it to you until, towards the end before closing.
Real world scenario. I just helped my stepson and daughter-in-law buy a home over in Simi Valley. And the agent was an absolute train wreck. I hope she's not seeing this. I could not get my AVID out of her, and I kept asking for it, and she was one that I got it 2 days before. So as a broker, my attitude is I have no control over what other brokers' agents do, but I do have control over what my agents do. So as long as you've done the AVID, and it's a very thorough AVID, I'm not going to penalize you and not pay you because the buyer's agent either doesn't give us the AVID or doesn't give us an effective or full disclosure AVID. So really, the only behavior we can control is our own, and if you do everything that you're supposed to do, you're going to get paid, and we're going to have your back if there's a dispute. We're going to hang it right on the agent who didn't perform. So take care of your business and you'll be fine.
Between the AVIDs,
Yeah, it happens all the time. Happens all the time, and it's a nightmare. It's a nightmare. Yeah.
According to her, the as an agent have a lot of burden to check the legal description, the category and everything like that. Isn't the escrow or the lender also responsible for that?
Well, we do check the preliminary report for all those things, yes.
Yes.
And we send copies out to the agents, to the buyer, to the seller, to review and to sign that they've acknowledged receipt. But I would say it would be a good practice for you to review the preliminary report as well.
Yeah, sure.
But I mean, we will take care of any issues on that report. But it's always good for you to know what's on that property.
So-
At the end, who's responsible if there is mistake? Because we don't have the knowledge with all this legal description, northern this, eastern this, southern this, so in case there is a mistake, whose responsibility? Isn't the title rep supposed to check it, the escrow supposed to, also the lender? It's important for the lender to know that, right? All these issues that you mentioned, that we have to pay attention to, all these title issues.
Okay, so what you're looking for again, and if you don't mind, I'll take you off the hook on that.
Okay.
I had a property over in Riverside that the title report said that it was a 6,500 square foot lot, but this was easily over a quarter acre lot. In fact, it was about 11,500 square foot. And so we had an additional 5,000 square feet somewhere that we couldn't figure out what it was, and it was a short sale, and it just was a mess. And so spoke to the seller. The seller said, oh yeah, that section of land, that 5,000 square feet, actually belongs to my neighbor, but he allowed us to fence it in because we have more functional use of the land because of a change in elevation. That piece of land did no good to him. Both people own the house free and clear. So what we were able to do, again, all as part of a short sale, is to get that surveyed, get that parcel of land, that 5,000 square feet, deeded over to the other property, so that we could sell that 11,000 square foot lot instead of the 6,500 square foot lot. And that wouldn't have come up if I hadn't looked at preliminary title and said, we don't have a 6,500 square foot lot. So you're just looking for the obvious. And if there's an obvious description, I pulled up one time to a house I prepared to do a 1,200 square foot, 2-bedroom, 2-bath listing, and I get out there and there was a 3,500 square foot house that had 5 bedrooms and 4 baths, and it was a completely different structure. So obviously there's a problem somewhere, and so when you know that there's a problem, you can advise the buyer, you can advise the seller, you can inquire of the seller, but you always want to make someone else the source of the declaration. You don't want to be the source that says, this is a problem, this is how it was caused. Make sense?
It makes sense, but then in the end, it was not discovered and escrow closed, and in the future it's been discovered. Whose responsibility?
They sue everybody, so it's so you're okay. You're part of the club. Yeah.
Well, you kind of touched on there that I was kind of curious about, encroachment and easements. At which point in time would you think about ordering a survey?
I never think about ordering a survey, but if the buyer has concerns about the functionality or use of the land, then I would recommend that they do that. For example, let's say you have a electrical or sewer easement, and you see a structure built on top of that. That might be an issue for you at some point in the future. So you may want to do a survey, make sure in fact that is compliant with the easement and not in conflict with the easement, and have to address it. But again, that would be something I would speak to the buyer, or in my case, the buyer's agent, and have the buyer's agent advise his client and let them make the determination if they want to pay the extra expense to do their due diligence, because it's really incumbent on the buyer to know what he's buying, and it's our job to make sure we give them all the information we possibly can to make an educated decision, but they have a right to do geological surveys, they have a right to do groundwater tests, they have a right to do any number of inspections, and absent them doing that, as long as I've disclosed, I'm going to be okay in the end. So, let's go down the line, or actually we can do it randomly if somebody has something. What I'd like now is for each of you to tell me one thing that you want to make sure that these people know that we haven't discussed. Or maybe you want to clarify something. And
Me? Go ahead. Okay. One thing that you should be sure is with your clients is never to give legal advice, ever. It's so important. In escrow, we
two hugs.
We don't give legal advice, and you shouldn't give legal advice. If your clients have questions, refer them to legal counsel, because you don't want to be in the middle of anything. We're not lawyers. We do not practice law, and that's one thing. It's very, very important for you to know and to understand. Okay?
And another thing is, not all insurance policies are alike. Many people, especially in this market, shop price alone. I can tell you that a broker came up to me last week at the Arcadia Board of Realtors and said, hey, I have a buddy that just lost his home in the Napa Valley fire, and basically went back and found out that he didn't have sufficient enough coverage to rebuild. And so I always tell my realtors whenever I'm teaching my classes is know that not all policies are the same. There's either specified limit policies, meaning that what you see is that's the max that company will pay, or many companies will pay a certain percentage above that. And the reason for that is because it's not an actual science, because we're not sending out all the contractors, all the tradesmen to determine the replacement cost. So every company has a formula based on certain criteria that they determine replacement costs, but in the end, it's up to your clients to determine, hey, is that sufficient enough for them to rebuild? And again, you're not the expert in that, so make sure that you have an insurance professional that's part of your team that can take on that liability. I carry $2 million myself on my liability E&O insurance, because if my staff and myself, we say it's covered, even if the policy says it's not, it's covered. But the problem is if you think it's covered because you thought I told you it's covered and maybe you misunderstood me, well, guess what? The E&O is now going to be on you as well. And so a good attorney tends to they say, sue everybody and see what S sticks, and that's who they go after. So I included in my pamphlet just 2 evidences of insurance so you guys could see what a HO6 and what a homeowner policy, what escrow basically will require. And that's called an evidence of insurance, because without that, they will not close escrow. So.
And I want to touch on that real quick. I consider Mark not only a friend, but I consider him to be an industry expert. And when I was shopping insurance, I went to Mark and I said, take a look at my policies, what can you do with it? And to his credit, first he found a $50,000 gap that we needed to cover, and he told me about that. And 2, he said I was getting an extremely good rate, so he was honest and said, stay where you're at. So I can't tell you how much that means to me, that you valued this profession so much and this relationship so much that you would do that. You wouldn't do whatever it took to get the business. So these are type of people you want to be in business with.
And I can tell you that even some of my own company affiliates strip down policies just to make the deal. And to the naked eye, you might not realize you're getting a stripped down policy. You're thinking that you're getting the same policy, and unfortunately you're not. So again, deal with somebody that's reputable that you can trust.
Thank you. I'll reiterate. Mark is awesome.
Okay. Where's my gift cards?
And as a lender, you want to have a team around you that's awesome like that. I can have a purchase contract in hand and a quote within 45 minutes from Mark for someone that may need that. So that's amazing too. I want to just remind you about the pre-approval. Don't get in that car till you know that your client is pre-approved, ran through the automated underwriting system. It makes your offer strong. It makes it doable. Work with professionals that you can trust and that you know are going to provide your clients with good advice. I just want to mention there's the qualifying portion. What do my clients qualify for? And then there's the portion that as a mortgage advisor, we want to talk to your clients about its suitability. Yes, maybe they can afford the $1 million house, but what is suitable for them? What really can they afford? And so those are the conversations. We're certified liability advisors as well. So we always want to provide our clients with the right information. So many times people are coming and asking about a refinance because they just want a lower rate. Day after day, we have people walk back out the door because we tell them does not make good financial sense for you to do this when you look at the cost involved versus the savings. How long will that take you to recoup that payment? And I will leave you with team, communication, and being prepared. Those are your 3 key things in a transaction: communication, preparation, and team. Thank you. Oh, I did leave this in your packet too. It's just some tips on first-time home buyers. And if you have any questions, you're free to call me or ask.
I have a quick question.
Yes.
Regarding the move-in condition that the seller has, as far as the loan is not funded until they move out. Let's say there's a 30-day, the seller needs to stay in there. So how does that work?
Well,
is it funded in escrow already, and then after
No. At the close of escrow, we fund, and then the following day it's recorded. And so it's very rare that I have this case, but I actually have it on the client for the first time in several years that are using that 3-day window. So they're going to fund the loan on Monday, and the sellers are insisting to stay for 3 days. So the loan's actually funded, and they're going to stay the extra 3 days. 30 days, I don't know. I don't know that I would close a loan and then have my clients just sticking around.
No, she's just saying that they didn't close, right?
Oh,
yeah.
Sorry.
I don't think that happens.
It's funded. You mean it funded?
Well, let's say they need to stay in there for an additional 30 days, the seller. So how, as far as the loan goes, it's not funded until...
No.
It funds. It funds and it records.
Funds the day before generally closes.
And all that happens is the transaction, from a practical standpoint, they do their job, the loan funds, it records. The buyer now is the owner and the landlord of the property.
Yes. So
and it's just a different
back.
relationship, right? But from a purchase standpoint, there's nothing that changes. And all the terms of the rent back have to be disclosed,
Right.
In order to protect you. But the monetary can be handled outside of escrow or through escrow, depending on the company and how you structure it. But you have to disclose any benefit. So if the seller gets a stay for 30 days, whether he's paying or not, that's a benefit to the seller, and you have to disclose it.
One of the things I would suggest, though, when you're having it under 30 days and whatnot, make sure, have the sellers go back and as a buyer's agent, make sure that they get renter's insurance, even if it's just for 1 week, 2 week, 3 week, 4 week. I can tell you, it's unfortunately being taped, but off the record, most companies will not sell renter's insurance for a week, 2, 3 weeks. So have them just go back to their own agent in home insurance and see if they'll do a personal favor to do that.
So good news is I don't think it's being taped, but it's being broadcast
Oh,
live.
God. I lost my agency after 30 years. See what I do to help you guys out.
And I just wanted to mention that in your packet there is Life of an Escrow here that might be interesting for you to know the sequence of how it goes to start. And then there's a pamphlet about our company. We've been in business over 25 years here in Arcadia. And it tells you a little bit about our officers and so on and so forth. You have something?
I just want to say it is extremely important you have a group of team members to work with you
So whenever you need help, they can jump through hoops for you. And piggyback on her question, let's say once when you close the transaction, if something happened with the title, let's say there's a judgment pop up from the previous seller, what do? You do not need to worry. That's the reason you have a title insurance. You just need to contact that title company, file a claim. So the title company's legal team's gonna take care of it. They're gonna eat that loss because they made a mistake. But there's no free lunch. So what happened with that judgment is title company, they would take that loss first. Then they're gonna go after whoever had that judgment to get that loss back. And then I also have this California Buyers and Sellers booklet. Everyone should have it on your table. If you don't, let me know. So it does talk about detailed information on page 11. What is the ALTA and CLTA policies? And this will give you more in-depth information. Thank you.
Just let you know, in California, no requirement for inspector have license. So when you choose inspectors, you have to make sure the inspectors are qualified. And at the same time, when you order inspector, make sure your property, all the utilities are on. If not on, inspector cannot finish 100% finish all the inspection. Okay. Second one is make sure they have insurance. E&O insurance, especially if you order commercial buildings, and they are require $1 million E&O insurance liability. And the third one, you have to make sure inspection company or this inspector provide to you inspection report with a lot of pictures, so as much as possible. So this one will help you in later on, you have lawsuit, something that happen, and you can prove, okay, this is picture that shows what's problem. So the pictures are very important, okay? So this is inspection, and at the same time make sure, and inspector is visual inspection. So they do not include everything. Do not expect the inspectors to tell everything. Okay, this is only visual. They can say they are report to you. You couldn't say that they won't. Okay, and the inspector do not smell. So any smells, okay, inspector doesn't smell anything, they are visual. Okay, thanks. So I will sure I will have all the information there, and also you can go to our company website. So looking for our inspectors, our inspectors, qualifications, and our service. Okay, thank you.
So if I want to give you one last thing to think about, I think I want to refer back to these people. If you don't have a qualified expert for escrow, you are the escrow expert. If you don't have a title expert, you are the title expert. And if you have a team of people that you work with, if you have a lender who you know with certainty, if they say this person can buy, they'll close it, you've got a gift from heaven. Every deal gets easier. So build your team. When I was in production and working very hard, my webpage said my team, and my team was all of my vendors. And I had their pictures, I had their bios, I had their history in the industry. I promoted them as part of my team because they gave me credibility. None of us operate in a vacuum. All of us need each other. And hopefully you got a sense of that today, that what happens is that each side has a task to cover, and when they cover it and do it well, your back is covered. So build a team, build a relationship, and that team and that relationship will push you through for a lifetime. You'll have a much more pleasant career. Don't shop price. It's never about price, it's about value. I'd like you to give these people a big hand. They gave great value.